Are you a trader that have a hard time understanding how to read candles, or a trader just have a hard time, understanding the behavior patterns of candles and understanding the timing and how to, catch good entries using candles? Where this video is right here for you. So I'm going to be showing you how you can simply use candles to understand the timing and how to understand structure just by using candles, right? So let's look at this. What we call this CRT, bearish CRT setup. For those who don't understand what a CRT is, CRT stands for Candle Range Theory. And what that is, to help you understand the timing and the behavior patterns of candles and how you can use it to understand the direction of the market, as well as understand how to catch entries off of this. So here's a nice, clear, good example of what a CRT is. So if we look at this, right, we can see how on this week right here, right, this is the high and low of this week green candle where it closed bullish, right? And then we can see on the next week we close bearish, which where this arrow is pointing out. This week here we close bearish. So when you see something like this, you can see how price closed bearish within inside the previous bullish week range, right? Right then and there, when you see a momentum like this, right, this lets you know that, okay, hey, this is a bearish CRT setup. Why? Because we can see here that on this weekly candle, right, that price was overall bullish, and then on the next week, price ended up closing bearish. What that tells me, just from a structure standpoint, that tells me, okay, hey, look, we was in an up momentum, then price shift, making a clear breaking structure, closing bearish, going to a down momentum. All that just from understanding how to read the candle, right? So what we expect is on the next week candle, we expect price to open and retrace up and to go back down, right? And so if anybody who understands candle behaviors, right, before when price if price is bearish, right, then you expect price to retrace up before it goes down back down in this direction. And if price is bullish, then you expect price to retrace down before it go back up in direction. But this is a bearish CRT direction. And what you would target is, since you are within this range, you either target the opening of that candle or the low of that candle. So there'd be your first target and second target, right? So, and this is actually a real life example. You can see how prices, so far it has not reached the first target yet, but this will be an example of what a CRT setup will look like. Now, also, I gotta show you where it can go wrong too. This is a prime example, right? So on this week here, we can see how price closed bearish, right? Typically, you expect price to retrace up and continue going down, but that didn't happen. Price ended up closing bullish. So this is why you also can't just use candles by itself. You also have to understand structure, you know, how to use structure with it. So if you can use structure with it while, using candles behavior on support and resistance levels, then that make it more easier to identify the direction how to use it. But this is just the basic anatomy of how to use candles and understand the timing of it, right? So what that means is on the next week, right, you expect price either going on that Monday and Tuesday to retrace up. So going on either on that Wednesday and Thursday or Tuesday or Wednesday, whatever how it does, that's where you kind of expect that flip in your entry. So this is a clear example of price retracing up, giving us a clear breaking structure, and then your entry will be around here, stop loss will be back above here, and you target here. And look, you just go for a simple 1%. 1% a week is all you need. A 1% move, all you need. That's 4% of a move every month. That's a lot of money if you think about it. Depends on how huge your account is. All right, but still, even starting small, you can continue building your way up and just consistently grow your account over time, and then you'll start seeing bigger gains off of that, right? So this is what a bearish CRT setup. Now I'm going to show you the opposite, and what a bullish CRT. So for y'all to know, this is yen futures I'm looking at right now. Now we about to go look at USD Japan, UJ, right? For those who don't know, UJ and yen futures move the exact opposite. Key word is USD versus Japan, so it just makes sense to look at yen dollar, right? So this is a bullish example of a bullish CRT setup, right? So we can see here that on this week here, we end up closing bearish, right? But then on the week after that, we end up closing bullish. So what that tells me that price was pushing down, and then we started going to its transition phase, pushing up. All that just from understanding, look at a candle, right? So on the next week, what do we expect? We expect price to open, retrace down, right? Once we make a certain percentage, we wait for a clear breaking structure like we see here. We got a clear breaking structure, and then price end up pushing up. Now you probably wonder, okay, like for this example here, we can see here that price closed bullish. Basically based off of CRT example, right? You would expect price to retrace down, and then continue going up. In this case, it didn't do that. It kept going down. Well, how we know? Okay, clear example. Well, if you see here, price constantly kept making lower lows. It never made a clear breaking structure. So even if we was going for a bullish setup on this week because we closed bullish here, we'll simply wait. So what that would look like, you want to see price make a like some kind of double bottom or head and shoulder pattern as it's coming down, and then flip and go back up higher. That's what you expect. But because it didn't do that, it just kept going down, it then gave us a chance for an entry to get in for a bullish setup. It's just that simple. All you do is watch the structure, because the structure is going to tell you the story. So, and if y'all ever just look at candles and watch candles, you will understand that candles retrace at a certain percentage before it goes up, and that's facts. Like I know for a UJ retrace. Look at my book real quick. I have notes on this stuff on how much UJ actually retrace from a weekly perspective. This is a weekly perspective. I was doing it from a daily perspective, but I switched to a weekly time frame because now I'm switching to swing trading because I realized this strategy works better from a swing trader perspective. Because let's say you trade from a daily perspective, some days are choppy and you can't trade that, so that way it can get hard, right? But on days when price action is smooth, then yeah, it works good. But from a weekly perspective, no matter if it's choppy, you can still catch moves and just hold it longer. But yeah. So from, man, I know I had it written down somewhere out here. Give me a second, y'all. Yeah. So from a weekly perspective, yen retraced on the average. This is for UJ and yen. It retraced on the average between 0.10% to 0.30% to 0.60% to 1%. So if we take this from the opening of this right here, right, and we put a retracement down, you can see this is 0.65%. So guess what? That's between that 0.60 to 1% range, right? That price retraced and they made a clear flip. So that's how I kind of already know my average that it should retrace. All right. So because like I said, when you start studying candles, you'll realize that they retrace at a certain percentage. So you start understanding the timing of when to get in, and that's when you just kind of apply the structure. And honestly, you can do this on any time frame. You can do this on a daily time frame, 4-hour time frame. I do feel like if you're gonna do this on like on a daily perspective or 4-hour perspective, I do feel like you need to drop all the way down to the 1 minute and trade it like that, But other than that, you can use this concept on all time frames. I do feel like this concept worked best on higher time frames, either from a daily candle perspective. 4-hour is the lowest I would go. 4-hour candle perspective, daily perspective, weekly, anything higher than that, it works perfectly gone. Like I said, I've been trading this style for a good minute and figuring out where it works best at in all conditions. And don't get me wrong, like even from a daily perspective, if you're an intraday trader, or especially intraday trader, I realize that as an intraday trader, right, it does work very well. But the problem is when there's days when the market is very choppy, you have no trade, you have no entry, because of how choppy it is. But on days that it's constantly, but if you were trading from a weekly perspective, you'll be able to catch some kind of trades, even if it was choppy, because you're holding it. Like the whole point of like these trades, like this is a trade where you might hold for like a week or two, especially if it keep pushing up. But this is overall, this would be your first target, so you target either the open or the high of that range, because we're within this range. So this would be an example of a bullish CRT. You can see here price retrace down at a certain percentage. It was the lowest point. It made a clear flip, and at that point took off. This is a simple way of understanding structure, right? Here's another. I'll give you an example of the understanding, right? Even here, right? If I look at these 3 candles in a row, no matter what, it still closed bullish. Same concept. It was bearish here. Price closed bullish. What happened? Price retraced down a certain percentage, then went up, taking out this high, right? So if you look, this low here is lower than its previous low. It's higher than the previous low, breaking this high, right? Breaking this candle high. So what that tells me, just from a candle perspective, we're bullish. This candle low here is higher. It's a higher low. Why? Because higher than the previous candle low. What that tells me, we're in a clear uptrend until what? Until this candle high right here, right? Fell this previous high candle, breaking this low, right? That let me know clear day we're in a clear break. You see how I can look at that you see how you can look at that from a candle standpoint and it make clear sense as day? So this is what I mean by you can look at candles to help you understand what structure is doing. It's a simple way of understanding structure as well. Instead of just looking at this overall structure, right? I can look at it from a candle perspective and understand what is going on just based off of the lows and highs of the candle and how strong it closed. That's all you're looking at. You look at the lows and highs of the candles and how strong it closed. And that can help you determine what to expect next. Once you combine that with support and resistance, then guess what? Boom, you have your nice whole system. So that's pretty much like, I low-key just kind of give y'all my style all in one, pretty much, on how I trade. that obviously I use stuff like moving average to help also understand the weakness and strength of trend, and RSI is the tells price overbought oversold. So I got a whole little system down pat, but this is like the one part of it, and I feel like if y'all can understand CRT, which is candle range theory, and understand the basic anatomy of candles, like stuff like this, I do feel like it can make a huge difference in your trading. So I hope this help you find value and help you get more clarity on how to understand the market and how to catch entries. And I will see you on the next market breakdown. And make sure you follow and like as well too, because I post a lot of daily. I won't say daily, but I haven't been doing lately. But I do post a lot of for the most part, almost every day I post daily market breakdowns every single day, helping you be able to have clarity and move through the market. So other than that, I will see you in the next video. Peace. Oh, and last thing, my bad. As always, y'all, the goal is not trying to avoid losses. The goal is not trying to catch home runs. It's all about surviving this game long enough to win. And if you can do that, you can be profitable. Deuces.